Welcome to the Debit This, Credit That podcast with Wheeler Accountants located in San Jose, California. In this podcast, we discuss how to solve accounting challenges in both your personal life and your business. We take an energetic, tech-savvy approach to solving accounting challenges that steal your focus and your time. Now, on to the show with your tech-savvy accounting experts, Matt Wheeler and Michael Bryant.
Hello and welcome again to another podcast. This is episode number 11, When the IRS Comes Knocking. Now, Matt, this sounds to me like a terrifying podcast. So how are we going to, right from the beginning, realize that that there's some really concrete steps that our listeners should take if this happens? Is that a fair statement?
Yeah, definitely. I'm sure everyone freaks out when they get a letter from the IRS. I freak out when I get a letter from the IRS at home, at my home address. We, as accountants, we have to register with the IRS for special numbers and everything, and they'll send us a letter to our home address, and every time I see one, I immediately freak out, right? So everyone freaks out a little bit, but the key, I think, is just to open the letter, obviously, take a look, and then start the process and get your representative involved as early as possible in the situation. There's really nothing to freak out about. An exam is a normal part of our tax, process here in our country, and really they're just trying to do their job to make sure that everything's being reported properly. And if, we've been planning right and doing our job, we shouldn't have anything to worry about. So it's just about responding to the notice and making sure we have a good strategy going in so it doesn't expand to multiple years and become a bigger problem.
Well, you just said, make sure you have a representative in place. That's where we need to start with this, right? So walk us through what that looks like, please.
Yeah, so we highly recommend having a tax practitioner, CPA or enrolled agent or someone represent you in the IRS exam process at any level of the process, really. You start by filling out a power of attorney form with the IRS. There's a form 2848 power of attorney form you fill out, and that gives your representative the authority to interact with the IRS on your behalf. And you want to do that so that you have a professional, communicating with them and then relaying all the information back to you. You're really not under any obligation to talk to the IRS yourself. You don't have to. They would have to actually subpoena you in the IRS exam to force you to come in and talk to them if you have a representative. So you have a legal right to representation, and we highly recommend that you do it because, handling the audit at the beginning properly makes such a huge difference in the outcome.
Gotcha. So so I get a letter in the mail, and so step one is going to be making sure that I have somebody like you in my corner, right? So that's very, very important.
Yep.
But not all letters are created equal. Is that correct? I mean, let's talk about the different sorts of exams that there are.
Absolutely. There's a bunch of different levels, and they go from the very mundane to the full-blown exam. There's actually, 1, 2, 3, 4. There's actually 5 of them, 5 levels, basically, more or less. And one of the first levels is just what we call a matching notice from the IRS. It's a CP2000 is what you would see in the corner of the notice as the notice type. And all that basically is a computerized or a computer-generated notice that's sent to you that says, hey, we see your tax return, we see reported X, and our system shows Y, so we think you're wrong, and you owe us money. And ironically, they never send you a letter when they owe you money, right? So only if they think you owe them money. And the letter, the way it's positioned, it has big bold letters on the front, on the first page, saying you owe X $1,000 to us by this due date. And then in the next couple pages, it kind of gets into why they think you owe it and what the sources of income are that don't match up and all that kind of stuff, or the payments that don't match and that kind of thing. So a matching notice is the first, kind of level, and that's not even an exam or an audit. That's just a letter letting you know that the records don't match.
Do you have to act on this immediately?
Yeah, you want to take any correspondence from the government seriously and act on it immediately. So you should be, if you have an accountant, like Wheeler Accountants, you're sending us the letter, as soon as you get it so we can help solve the problem for you, right? First, we're going to take a look at what the situation is and see if you even owe any money. Second, there's a due date in the letter. That's a soft due date on the CP 2000 notices. So if you were to do nothing and not respond to that letter, they'd wait 30 days. Then they would send you an identical letter with a new due date 30 days from then, saying the same thing. You owe X dollars. It'll be a little more because of additional interest by that time. But you still have time to respond and deal with the notice. If you don't respond after the second notice, then they kind of move the process along towards assessment and then collection and everything. But and we can talk about that in a second. But you want to respond early on, because the longer you wait, the closer you get to the part where they're going to start collecting from you and taking money from you. The harder it is to fix the problem, the more urgent everything is, and it just becomes a giant pain in the butt, basically. So you want to deal with the problem as soon as possible.
What happens if they're wrong, though, Matt? I mean, if we know that this is incorrect, what power do we have, or is that power really by proxy through you because you're the expert?
We'd recommend that you go through us, right? And then we can help draft a response to the IRS, letting them know they're wrong and here's why. And they often are wrong. A big one that we see here in Silicon Valley a lot is you'll get a matching notice because they show that you sold some stock and you didn't report the stock sale in your tax return. And this is usually related to stock options. So a lot of people here, when they exercise and sell stock options on the same day, it's usually reported inside their W-2 as W-2 income, and they think, hey, I've already paid my taxes, I've showed the income, I'm good. But there's actually two components to that transaction. There's the exercise, which triggers the income in your W-2, and then there's the actual stock sale, which you need to show on Schedule D of your tax return. And if you don't show the stock sale, and the IRS sees there was a stock sale from your brokerage account, from the 1099 that the brokerage gave to you and to the IRS, they're going to show a mismatch there. And a lot of times the brokerage 1099s aren't required to show the cost basis of your sale, or they only show a portion of it and they don't factor in the adjustments that are required because you did a stock option where you had income on your W-2. And so it can be a very large number they think you owe in tax because they think you have a large gain, even though really you've already paid tax on that gain in your W-2.
Okay.
So all we do in those situations is kind of get all the documentation together, draft a response, send to the IRS, and then we wait.
And then
we wait.
Okay.
And we wait. And we wait. They'll send you probably 2 to 3 letters that'll say, we got your response, we need another 45 days to look at it.
Oh.
And that'll happen like 2 or 3 times.
Ooh.
So, they have the power to give themselves as much time as they want. Of course, we don't get that luxury, right? But you want to respond early and then kind of wait and see. And usually they'll come back and say, okay, we agree to your changes. You're fine. You're in the clear, Okay. Or if whatever they disagree, you can escalate it from there if you need to. But rarely in the matching notices do we have a problem. It's usually a very simple explanation as to why they're wrong and we're right. And if they're right, you should just pay it as soon as possible because you don't want to, incur more interest and penalties. And, their computers are pretty good. And if you missed something because you forgot you had an account somewhere and there was a 1099 and there was income from that account and it wasn't on your return, then they're going to find it usually, and they're gonna send you a bill and you should pay it. And then in those situations, you also need to remember that the state's going to come after you too. And so it's in your best interest to self-disclose to the state and file an amended return before they come to you. That way you mitigate your interest and penalties with the state as well. So
okay. So that was a matching notice, which is not an exam. So why don't we elevate this to these other actual kinds of exams? And if you don't mind, and I apologize if you did this already, but I think it would bear good for our audience if you could explain and define what each of these exams mean and even what an exam is.
Sure. If we talk about the assessment of tax process first a little bit too, because that kind of ties in, I think, to the whole thing. And we should
fantastic. Yeah. Well, you're the expert, man. Let's go.
There's a couple different levels that you get to within the IRS before they're going to, swoop into your bank account and take money out of it, right? And usually when I have clients that get a notice, their first fear is that the IRS is going to come and, levy their bank account like the next day. And there's a lot of safeguards put in place by law that limit the IRS's power to where they really can't do that without going through a bunch of different hurdles to make that happen. So you actually have a lot of time before you get to that stage. When you get that letter from the IRS saying they think you owe this amount of money, they're proposing an assessment of tax. So they're saying, we think you owe this much tax, but it's not on your record as owing the tax yet. You have a opportunity to respond and disagree and fight it or whatever. But, it's not actually on your account as owing the tax. Now, if you don't respond after a period of time, or if you agree to it or whatever, then they will actually assess the tax. When they assess, you do have some options at that point. You can still appeal usually, or you can petition the tax court, which if you haven't gone through appeals yet, they're just going to kick you back down to appeals. But you have options to, fight it still at that point, even after the tax has been assessed and your account now shows that you owe the tax. And then after assessment, the collection process begins. And the collection process takes a fairly long time. Typically, there's a series of letters. There's like 3 to 4 different levels of letters that take place, and they get nastier and nastier. And one of the final ones you want to look out for is a CP 504 letter, which basically says that we intend to levy your assets to collect on this debt. That's when you're getting serious. And we get new clients that come into our office every once in a while where they're at that stage already. And at that point, it's like an emergency, right? And we need to get on it ASAP because you only have anywhere from 30 to 60 days before, it's going to hit the fan, right? So those are kind of the 3 stages: proposed assessment, and then collection. So as you go through any process dealing with the IRS on any sort of dispute where they think you owe more tax, you have time. You also have options along the way to fight it. So you don't need to, lose sleep at night immediately upon getting a letter saying that they think you owe some money. While it is scary, a lot of times they're wrong, or a lot of times we can get that down, or we can fight the penalty portion of it or something and, have a better outcome. But there's a lot of steps that take place first, and they're not going to go in and take your assets, the next day. They're not going to file a lien on your house immediately. They don't do that till the very end of the process if you really can't pay and you've gone through assessment and the full collection process.
Okay. So now define exam, please. So tell us what that means, and then let's go through those different types of exams.
Yeah, so the IRS uses the term exam. We commonly refer to it as an audit, right? Everyone calls it an audit. They're interchangeable. It's the same thing. We use the word interchangeably when we're talking about IRS exams or IRS audits. That's when they're going to go and they want to look at specific items of income or deduction on your tax return, and they want to have you verify those amounts. So prove that the deductions are valid according to whatever substantiation requirements there are for that code section, or they want to prove that the income was disclosed, or whatever the case may be. So an exam is much more in-depth than the matching notice. That's a very superficial, and it's not exam. They're not asking for proof. They're asking for an explanation. In the exam, they're asking for proof. So here's where it starts to get more interesting, and being well prepared and having representation becomes extremely important. And there's a few different types of exams. They range on the low end from a correspondence exam to an office exam to a field exam, and then they have these other exams that they call research audits, which are actually research audits are the nightmare of exams. These are a program the IRS created to kind of measure overall compliance with taxes, and they basically look at every single item on your tax return for the year, and they need proof for everything, no matter how small. It's absurd. They don't do these too often, but if you are the unlucky person that's been chosen for this, be prepared to go through every little thing on your return. It can be literally a nightmare for those, but those are really rare. So, we're not going to cover those in this podcast.
Okay. But
the other 3 are a lot more common: the correspondence, the office, and the field.
All right, so let's go in order of severity. So let's go least severe here with the correspondence exam. Break this down for us.
Yeah, so the correspondence exam, that's a limited scope exam. The IRS sends you a letter. They say, we're examining your return, Matt Halloran, and we want to take a look at your top advisor radio business, and we want to look at these couple categories of expense: meals and entertainment, your auto expenses, and then your rent expense or something. And so they'll check little boxes on the form that'll say which ones they want to look at, and they'll give you a time period, say 30 days, to provide all the substantiation and records that prove the amounts you claimed in the return for your business that they're auditing. I dislike correspondence exams the most, personally. They're frustrating for me because you're not assigned a person to work with at the IRS. You're sending a response to a black hole there, and then you're getting a response from the black hole at a later date. So when there's some more nuanced things that are in the return or more difficult to explain over correspondence, better explained in person or something, you can't really do that. They're not my favorite, right? But they're also the least invasive kind of exam. They're usually just limited to a few certain areas, and that's it. They don't audit other parts of your return. Most often these happen with a Schedule C business when you're self-employed, and it'll be just a few areas where they're going to, be choosing to audit you.
So what happens if they're wrong here? You're talking about throwing things into a black hole. What are the sort of time frames that you need to file an appeal, or that you do it on our behalf? How does that stuff work?
They'll give us an initial time frame with which we can respond to the stuff they're looking for. You typically ask for a little more time because it's pretty tight, usually like 30 days, and you're going to need time to gather your records. We're going to need time to review what you put together and then kind of compile it in a format that's good for the IRS and then send it off. So we usually ask for more time at first. That's usually not a problem. You can usually get in there 30 to 60 days relatively easily. And then we'll send our response to the IRS with all our backup for all the documentation that was claimed on the return. And if we have everything that we're, claiming, then we just wait for them to get back to us, and they'll issue a draft report. And it could be, best case is a no change report where they agree that, everything's fine. We don't owe any more tax, and we're done. If they determine that some of the stuff that we sent was not valid or not good enough for their liking, and they're going to disallow some of the deductions, then they're going to put that on the report. They're going to increase your income by the amount of deductions that they're disallowing or by the amount of income they're adding on. They're going to run a little tax calculation. They're going to say you owe this much tax with interest and penalties, and you owe it by this date. And if you agree, sign here and send us a check. And if you don't, then we can go to appeals, which is the next level up. Appeals I do like because when you get an appeals officer, they're generally a little higher level than the IRS. They have more tax knowledge, and you can reason with them. But that process takes a long time. You'll be waiting, 6-9 months to get assigned an appeals officer. The IRS is very short-staffed these days, so this whole process, all of it can take a long time when you start to get into, more complex situations or you have some sort of dispute.
So what's next?
So next is an office exam. So the correspondence exam, just the back and forth. We write letters. They say this, we say that, we fight it, whatever. Office exams when we get to work with a real live agent to work through the issues on the tax return. An office exam, they'll send another letter saying you're being chosen for examination. They'll usually include what's called an information document request, or IDR, and that'll have a whole laundry list of stuff that they want to look at on your return. It can be very specific. It could include general things. They could want you to include statements about your business, for instance, and some history of it. They'll want to see proof of all certain types of deductions and that kind of stuff. A lot of times they'll kind of throw the whole kitchen sink at you at the beginning. And so, that's why it's important to hire a experienced professional like us. What we'll do is we'll go and talk to the agent, call them up after we have our power of attorney signed from you and say, hey, I'm representing Matt Halloran, got your audit notice. We would like to ask for a little more time to gather our records. We'd like another 60 days if that's possible. They say, sure, that's fine. And then we get into the, first document request, and we ask, hey, got a lot of stuff on here. Matt's got all the records, we're in good shape. But if we could limit the scope of this, he's got a lot of little gas receipts. And do you really want to see every single little, $30 gas receipt? Do you want to sample out of that account? Do you want to give you a ledger and you can pick the 10 that you want to see? Or can we just skip anything under $75 or, things like that? And they're usually pretty reasonable, and then we can actually get them to, decrease the scope of the audit pretty substantially, and that, saves you time putting records together, saves us time, and, avoids them looking at so many areas, which could lead to other questions, and we go from there. The longer the audit goes on, the more stuff they look at, the more time that the agent has invested in your case, the more they want to get something, right? Because their boss is breathing down their neck to close cases and move on. If they're spending a lot of time on a single case, they need to get some return on that time investment, right? So you want to be in and out of there quick as possible.
Okay.
Make their job easy. That way they can move on to the next guy who has crappy records, and then they can nail him for tens of thousands of bucks, right? But they're not going to get Matt Halloran because he has good records.
Right. I like the fact that you just gave some people some confidence there that having somebody like you in the corner, you have the opportunity to negotiate in their language.
Right, exactly. When you say negotiate in their language, that's really important because, We also know the things that we don't want to say. Sometimes the client will say things that just lead the agent down a path that we don't want them to go down to. Not like we're hiding anything, but it just could raise eyebrows and questions and further delay the audit because you got to know like the words to avoid, right?
Right.
And there are situations where it's like if we have a business where it's a little more of a gray area, not as profitable in the beginning, and the IRS is looking at the overall profit and how many years you've shown a profit and that kind of stuff. Like we never want to use the H word, hobby, because there's hobby loss rules, and if you use the H word, you're done. They're gonna say you're not in it for a profit. You lost money. You can only deduct the expenses up to the amount of your income, and the rest you lose. Gone.
Wow.
Right? And there's no rule against losing money.
Really?
You can be bad at business, or bad at whatever you do and lose money and offset it against your other income. But after you lose money for 3 years in a row, the burden of proof shifts on you to show why you're in the business for a profit. So you got to show that long term you are going to make a profit. And there's certain types of businesses or activities that people get involved in where there's a lot of startup costs, time and effort spent in the beginning to build up clientele or revenue or whatever until you start to show a profit. And so you really just want to, that's like one example of where you want to avoid certain things like that.
Gotcha. All right. Well, let's dive into the exam of all exams here.
Yeah. So the office exam is the next level up from the correspondence exam. You're working with a live person, that kind of thing. The field exam is kind of the next level above that. Have you seen Zero Dark 30, the movie?
I have not.
You've not? Okay. It's about all the interrogation of terrorists in Iraq and everything, and the war on terror to try and find bin Laden. And they go in there and they torture everyone in these dark rooms.
Yeah, I'm familiar with familiar with what the movie was about, but I haven't seen it. Now, hold on here. You're not saying that this is actually what happens in a field exam, are you?
No, I was going to say something like that.
Fantastic. I don't know. I saw that thing you were chasing there and thinking to myself, oh my gosh, I'm totally hiring you guys from here on out because I definitely don't want that to happen.
Yeah, no, it's not that scary. So a field exam is just when the agent wants to come out and they usually want to go to the taxpayer's place of business. This is more common when we have a business audit, whether you're self-employed or whether you have a separate entity like a corporation or something. And field exams, they're looking for a lot of stuff around the actual place of business to kind of give them clues if you're hiding anything, beyond just the actual records. What we always do is we have the agent come to our office, the accountant's office, and we have you bring your records here, assuming it's practical to do so, which these days more and more it is because more and more is paperless. It's not as much gigantic boxes of stuff like it used to be. So we'll have them come into our office and do most of their work and digging through records and asking questions of us and everything. And then if they really, really insist on doing a field visit where they want to go visit your place of business, we'll agree to it, but we'll do it separately and we'll make sure that we're there and make sure they don't snoop around everywhere. And, it's just not good for your business. I mean, Think about it. If you're our client, you don't want the IRS snooping around on a day you got customers coming into your office. And you're like, oh yeah, the IRS is here looking at us. They're like, well, what are you doing wrong? But, so, we want to limit that as much as possible, right? We don't want the IRS going to your place of business. They can come to our office. We put them in a dark room with no lights and no windows, and they can look at your records and, have fun in there. No air conditioning, So
very good, very good.
Anyway, so the field exam, very similar to the office exam. It's going to be the same thing with the information document requests and that kind of stuff. Just they're coming to your location. They're coming to see you and review the records. And sometimes it's necessary because the records are so voluminous that they have to come out to you. You can't just bring them into the local IRS office. So those are, relatively common too. Field exams, office exams, they're kind of interchangeable. Just depends which one they decide they want to do.
Okay. Now you guys have an actual strategy. You got 1, 2, 3, 4, 5, 6, 7 kind of sections to this strategy. So let's talk about. And here's like the meat and potatoes, everybody, because the first step here with your strategy, as you had said, was ask for more time, which is an interesting strategy. But Matt, go through the rest of these points here so that if people do get these letters, they at least know a step-by-step way to really attack this.
Yeah, our go-to is always asking for more time. We don't do it for the notices we talked about earlier, the matching notice. We don't need more time for those usually, but for any sort of exam, we always ask for more time because they usually want to schedule an appointment and meet within like 30 days. And you need time to put together all your records. And our next part of the strategy is being prepared. And to be prepared, you have to have time to do that. We need you to have time to get your records together and organized. Then we need time on our end to review everything, compile it, put it in an easy to understand format for the agent. And then we need time to give it to them and then for them to review it. So usually the initial time they're requesting of like 30 days, it's too short. It's not good enough. So I've never had an agent, not give me more time. There could be a scenario where if you're up against a statute of limitations because it's been a long time since the year was filed that they may be less willing to. But usually in those cases, they're going to have you sign something that extends the statute anyway so they can have more time to audit you. And if you don't, they're just going to disallow everything on your return. So asking for more time is something we pretty much always get. And that really gives us time to be more prepared. Having a good, complete file can mean the entire difference in the exam. We've had some really great success with some clients where we had, they had a business that was it was a little more aggressive position on the losses taken in early years. Not that the deductions weren't, valid or anything. We had backup and proof for all the expenses. But, there were significant losses in early years, and the IRS is probably going to come back to us and say, I embraced my client for this. I said, okay, Joe client, they're gonna come back with the hobby loss argument here. They're going to say you're not in this business for a profit. So I need you to put together a memo outlining your whole business plan, all the market research you've done, all this backup that we have so we can show to them, we take this business really seriously. We're in it for a profit. There's losses in the beginning. It's not uncommon, but we expect to make a profit of X dollars in years 4 and 5 and 6 or whatever. Position ourselves for that argument. But on top of that, his team had put together this beautiful binder for the exam. It had every category of expense he claimed on the return. It had a summary sheet that showed the total and then each item of expense that added into the total. And then behind that sheet, it had the proof of the invoice and the payment for each expense, which matched those numbers on each lead sheet or each summary sheet. And then all those numbers tied exactly to our tax return.
Wow.
So this is this beautiful, well put together binder. The agent came into our office. This was a field exam, but we did it at our office because the business is actually in Idaho. The IRS agent, I met her. We talked for a little bit. She went through the standard questions that they ask. Then I gave her the binder the client had. We didn't talk about the hobby loss thing. We don't bring up anything unless the IRS brings it up.
Mm-hmm.
That's part of the strategy. And then I let her at it. Let her have to take some time to review all the records and everything. I went back to check in with her a couple hours later. She asked how things were going. She said, "Oh, they're going really great. I'm just making sure that you put this line of income on the right line here on the return. I think it might go on this line instead." Which this was a completely trivial thing that made no difference to the actual tax due.
Uh-huh.
So I'm like, okay, well that's great. Keep researching that. Make sure you find out if it's on the right line or not. Let me know if you have any questions. Walked out, came back in an hour or so later, and she said, "Hey, thank you so much. Everything was really great and organized well. I'm going to recommend a no change to my boss, and then I think we're all done here." And boom, we got a no change.
Wow.
The whole argument, the battle we were bracing for, didn't even come up. And I attribute that entirely to being prepared with good records.
Mm-hmm.
Now, imagine the opposite. Imagine if we went in and we had sloppy records, nothing tied out, we were missing a bunch of things, and then, she'd have to look through it and say, okay, well, now I need this more information or, this. I'm going to take it back to the office. Now she's got some time into it. Now there's tax. Then her boss looks at it. Her boss maybe is more knowledgeable with the hobby loss rules. She says, well, what about the hobby loss issue here? Should we ask about this? Pretty soon they're asking about that. Then we're in this huge fight on that. The agents may not have a high technical skill level on some of the nuanced things like the hobby loss rules, and they're not able to interpret the various court cases that have come down where taxpayers have won or lost on that issue. So all of a sudden they're going to disallow the entire thing because of the hobby loss rules. Now we got to go to appeals and fight it there with appeals. Maybe the appeals officer, we can get a better, situation or get like a partial win or something. But not only have the client not spent way more in fees with us to go through all these steps, they may end up losing money anyway. So being prepared is paramount. That's huge.
Well, and so you're going to be able to help with that. Is there anything on this exam strategy that your clients help you with besides the preparation? One of the things that you say here is be willing to horse trade. What does that mean exactly?
That's part of the strategy that we do with the IRS, and we have some issues where we have kind of some partial issues where we're going to win on some, we're probably going to lose on some,
Okay,
or it's going to be maybe not worth fighting on some of them.
Mm-hmm.
So this came up with the client where we had a couple issues under audit. There was some rentals that were short-term rentals, and we done a podcast on the vacation home rules, and we have a white paper on that. You got to go to our website to read about it. A great write-off, huge even. But so we had those issues. They were big losses. They were write-offs. But then we also had some expenses the client was taking where they were on Schedule A as miscellaneous itemized deductions for their business. Those were pretty large expenses too. But there are the two major areas here that we were under issue. We didn't have a super strong case on the miscellaneous itemized ones, or not as strong of a case. The rental was a little better. I felt more comfortable with that one. And so the ones on Schedule A, when we ran the numbers on the return, if we took them out, it actually made no difference because those items aren't allowed for alternative minimum tax purposes for AMT. So it actually wouldn't change the tax due at all. So it changed the state tax a little bit, but not the federal. The rental, on the other hand, would have made a big difference on our tax due. So I went back to the auditor. I said, okay, why don't we give you guys the Schedule A stuff? You can take that one, but we want to keep the rental loss. We feel we have a strong case on that. And they agreed to it without even running the numbers, right? So then we were able to horse trade here in a situation where we didn't really lose much by doing so, and we preserved the larger deduction, right? So it's just one of those things where you got to be willing to give them a bone every once in a while to have them get a little bit of a win. If you're in a situation where you don't have all the records, right? If we're down that path where we're not going to get a no change on the audit, and we're pretty confident we're not, start thinking about where you can give them a little wins and little victories so you can keep the bigger stuff, right? Mm-hmm. Or a lot of times there's issues where it may affect future years more or be a bigger issue in future years. And so you want to fight more for those. And the IRS may not know that that's where you're coming from on that. So they may not care to give you those ones. And you can give them the easy small ones that don't matter as much, right? Okay. Or the ones that are just a current year thing. So
let's talk about appeals.
To negotiate.
So I'm sorry. Let's talk about appeals there, just because. I mean, if horse trading isn't working and some of the other things, you still have recourse, correct?
Getting an agent in the exam process is the total luck of the draw. It's a lottery. I mean, you can get a good agent who's been around a long time and knows the rules pretty well and is reasonable and uses their judgment wisely, or you can get the green agent that's only been doing it for a couple of years and doesn't understand as much about taxes, right? That's unfortunately the case. The IRS, just like everywhere else, has issues with not only retention, but large chunks of their more experienced personnel hitting retirement age. So we're seeing more and more agents that are inexperienced. So sometimes we get a situation where they're just not understanding the tax rules and how they work, and we're getting nowhere. And so we basically just tell them flat out, we disagree, go ahead and disallow, and then we go ahead and file an appeal from the revenue agent report. And then from there, we can go to appeals, which is a whole nother level. Appeals is the next step in the tax, dispute process.
Okay.
Most of the appeals officers are highly experienced. They've been around for a long time. They know the tax rules. And with them, you can really talk the nuances of the tax positions. And they can also do even more of the horse trading or negotiation. So they actually have the right to consider the hazards of litigation, because the step beyond them is the tax court. And then the government would need to put some attorneys on the case to fight your, for their position against you. That gets expensive. Mm-hmm. So there may be issues where, we trade and, split it down the middle or some of those kind of things, because they know they may win, but it may take a lot of time. They know we may win. It may take a lot of time and money. So they're willing to give us something, even though maybe it's more questionable or whatnot, and vice versa. So Appeals, you can get a lot of good out of appeals. Or if the original agent just had no clue and was a complete idiot, the appeals officer can rectify the situation and get it fixed for you. So you have a lot more options there. It just takes a long time to get there. When you apply for appeals, you're waiting 6-9 months to get assigned an appeals officer.
Wow.
And then schedule a meeting, and then go through the whole process with them. So you're looking at least a year probably to get your issue resolved if you're going the appeals route. But if that's what you got to do.
Right.
That's what you got to do.
Okay.
And if you do owe some tax, you can do it. You can make a deposit, or you can pay some tax as early as possible and really mitigate your interest and penalties. And it also shows some good faith. So if we got a client where we think we're probably going to owe some money, we'll have them talk about making a payment, and not waiting the year, because it's going to keep racking up interest and everything. So, making a payment earlier may help your case a little bit, especially in appeals, showing, hey, we agree on these, we already made a payment, but we strongly disagree on these couple issues or whatever, and deal with it there.
All right, so let's go back through some of these different steps here, and we'll wrap up episode 11 today.
All right. So you got to remember, dealing with the IRS can be scary. We all freak out when we get a letter. Blood pressure rises, heart rate increases. But having proper representation and a solid plan in place can really improve that final outcome for you. The simple steps you got to take. You got to hire us. We need to ask for more time. We need to get prepared for your exam. We need as detailed of records as possible. And the more work that we do up front, the better your ultimate outcome is going to be, the better the chance of you getting a no change situation. And an exam can often be a lose-lose for the client, because even if we get a no change, they're still going to owe us for our fees, right? We bill hourly for the representation work. It's a luck of the draw and getting audited, right? But at least getting a no change preserves as much of your deductions as possible, and it also really helps you in future years if they come back and try and re-audit you on a similar issue. If you had a no change from a couple of years ago, that's a strong indicator that they're wasting their time, and we can get out of there. Success is mitigating the damage. Minimal tax owed or no tax owed is the best, and obviously staying out of jail is a success. So we try and keep you out of jail.
That's awesome.
And jail is extremely rare too. I mean, fraud and that kind of stuff, we don't really deal with any of that. We would have a tax attorney involved at that point who's well more versed in that kind of thing, but I've never seen an issue where they've claimed fraud or even gone that route. You have to be pretty egregious. I'm not saying telling everyone to push the envelope or anything, but jail is so far off for most folks. You got to be hiding hundreds of thousands of dollars in cash in your restaurant business because you have a second register kind of thing or whatever. And even then, jail's probably unlikely, but big fines are likely. So, people tend to worry or see the worst. They imagine that interrogation room in Zero Dark 30 or whatever, but it's not the case. There's just agents for the government. They're people doing their job. I mean, I like to think that they probably hate their job at night going home because they work for the government. So, they're already having a hard enough day. I try and take it easy on them and just try and get to a good resolution for them. So
I get this correspondence in the mail. What, just walk us back through there real quick. So what do I do?
You let us know immediately the correspondence that you got. Send us a copy. We can determine, what sort of resolution is required or if any, but we got to know about it. It may impact your prior return. It may impact a future return. They could have changed some sort of payment going in from one year to the next. You got to let us know. We always ask our clients if they've been contacted by the IRS or any of the state governments, agencies. You just got to let us know. That way, if it's an exam or, the worst like an exam, we can at least, prepare for it properly and be ready. But we got to know and get out ahead of it, be prepared to have a good outcome.
Fantastic. Well, thank you for your brain today, Matt. I appreciate it.
All right. Thank you.